Yeah, welcome everybody for this panel discussion which we are doing today. The topic is what can we expect in the next months in the domains around digital securities and also crypto assets. That's what we want to talk about today. We have a couple of true experts from the field, also from consulting companies which are observing the entire market and therefore have a very, very good overview of what's happening in the niche of the market. And therefore, I would like to ask everyone very briefly to present himself. And as always, maybe a little bit of a disclaimer from my side. There will be personal opinions being brought to you, which might not necessarily be the opinion of the entire company. I think that's pretty clear, but I'm just mentioning this for compliance reasons to make this clear. And with this, I would like to hand over directly to everyone here in the panel and ask them, who are you? Please present yourself and also please present your company. Who wants to get started? Mark, would you like to get started? Markus, sorry.
Yeah, I can start. So I'm Markus. I'm a principal with DeFi. I'm roughly since 10 years in the consultancy business. And roughly 6 years ago, I joined our blockchain unit. And since then, I have helped many clients with conceptual and implementation work. So we have worked on crypto custodian really early on. And also like in the recent months, we have also had project in the space. And we are also now shifting to crypto securities. It's a new hot topic because sort of infrastructure has to be built. And with that, I hand over to, say, Volker.
Okay, thank you, Markus. My name is Volker Lehmann. I work for EY IFB. We've been acquired in December last year by EY. We are the digitalization transformation hub for EY FSO in Europe. We work very closely together with our colleagues at EY. And my background is more on the digitalization side, and the digital assets is one of the key topics we have to address there. So I hand over to Thomas.
Perfect.
Thank you very much. My name is Thomas. I'm working for Metaco, a leading provider for custody solutions. I'm in the digital area for over 2 decades, always being on the provider side for different technology companies. Philipp.
Hi, thank you. I'm Philipp Ridaeli. I'm the managing director for on-chain data of Kaiko. And Kaiko is a data provider in the digital asset space that has been existing for more than 10 years. We have like 200 clients and a global presence. And my personal background is from regulated financial market infrastructures. I've been the general secretary, for instance, of one of the Deutsche Börse Group exchanges in the past.
Perfect. Thanks much. And then with this, let's directly jump into this discussion. And the following question I would like to ask every one of you. The question would be, what do you expect in the upcoming months to happen? Right now, we are, at least in the crypto domain, a little bit in a stagnating phase. So you could also reply that not much will happen, right? Who knows? But let's hear everyone. And luckily in Germany, we also have the digital securities domain, which create some kind of dynamics, I would say. So we also have the digital euro discussion from the ECB, which could fuel a next wave of interest into the technology. And therefore, let's sum it up. What do you expect in the next couple of months? Who wants to give it a start? Maybe Thomas, would you like to get started?
Yeah, fine for that. Thank you for the question. I mean, I think that Germany and also Switzerland and Luxembourg are special because they have very modern and state-of-the-art laws and regulations for digital assets, as where other parts of the European Union are not in that lucky situation. But due to some research we did, for instance, Citigroup did a report that in that year, 74% of the asked people said that they will participate in the next year in digital securities ecosystems, whereas in the last year it was only 47%. That means a double of responses that they will accept and work in digital securities area. If you look on international companies like Goldman Sachs, UBS, HSBC and others, they are all active in issuing digital bonds, for instance, and the deal sizes are quite nice, all above 100 million. Now, if you compare that to traditional instruments, it's still low, But we believe that is a promising start, that through digital bonds, especially for institutional business, the market will strengthen and increase.
Perfect. Let's dive into this in a second, and let's hear everyone first. Philipp, what would you like to add here?
Yeah, the trend, I see three trends. Basically, regulation will definitely continue with very deep dive laws like the applicable law in international private law or model laws. The second trend is, yes, I think we're all going to say that commercial offers by market participants, banks, and market infrastructures will keep being observed, sometimes several per week. And the last trend that I see is one a bit under the hood. It's about interoperability. So there is work in the background around standardizing processes, bridging across DLTs, and in our field, for instance, building standard data models. The last bit is a bit less known, less publicized, but to me is one of the key unlockers for the market.
Yeah, let's dive into the standards part in a couple of seconds, because this is really something where we have to do a lot of work. For example, in Germany, we know it from the digital securities. There have been some early prototypes. They are called digital securities sui generis, right? They worked, but they have not even been standardized from a law perspective. And now what you're mentioning, Philipp, is that more standardization needs to take place, probably from the technical perspective as well, and so on and so forth. That's something for the next, I don't know, months and years. Let's discuss this in a couple of minutes. That's very, very important. Markus, what about your expectations for the next couple of months?
Well, I would say in the recent months, traditional players, they have entered the crypto market, building infrastructure, and I expect that, say, in the next months or so, there will more and more bigger players just entering the market with crypto offerings. So it will probably focusing first on crypto assets. There will be also like a increasing number of players looking more for sophisticated like crypto securities. So on the CBDC side, I expect, say, less movements. I think there will be more experiments going on, like testing different distribution models and so on. But I wouldn't expect, say, any major change within, say, the next 1 or 2 years. But probably on a longer scale of maybe 5 years, there will be something like a wholesale CBDC.
Yeah, that's an interesting point, because the CBDC from the central bank would not come immediately overnight, of course not, but at least it would create awareness and dynamics in the media, and it would also lead people to investigate this topic even more broadly. Let's dive into this also in a second. And finally, Volker, what do you expect?
Yeah, I think it's, as I already said, there is an investment in infrastructure. And this investment in infrastructure inside the banks and the wealth managers, they come across that it's quite a normal implementation project. You come across the infrastructure, you have to connect to the different systems, you have the compliance issues to be solved. And I think everybody making his experience there, and everybody wants to make some experience there to be well prepared.
Okay, so I'm going to summarize what we have just heard. You mentioned that crypto offerings can be expected. You didn't explicitly mention ETFs, but we all know that ETFs are on the way coming to us. Also in Europe, not just talking about the US here. The ECB's digital euro has been mentioned. Stable coins have not been explicitly mentioned, but we could also expect more movements there. And you also mentioned, of course, infrastructure from the domain of digital securities and crypto securities. That's basically what we are expecting here in the next couple of months. Nobody said that there will be another bull run. Yeah, so apparently this might take another some more time until this arrives. Just mentioning also what you did not mention. Let's now talk about the standardization data part brought up by Philipp. What do you mean exactly with standardization, and why is it so important? And do you think that we are in the next couple of months on the way to go to improve this, or is this more long-term?
Sure. So first question is, what is it? So imagine we don't speak the same language. It's the Babel thing. It's a very old story. So if we want to do commerce, if the industry wants to be able to grow as an industry, we need to all agree on a common, or at least on dictionaries, and this layer of the data is fundamental. Let me give you a few examples. I won't expand on how important data is in DLT because it's data driven. So if a DLT platform needs data as an input, the DLT platform needs to be able to go and fetch any kind of data for that. If the DLT platform wants to be visible and compete with other market infrastructures, it needs to be in the screens of the traders and in the market infrastructures. So this is data. It's data in and data out. If you are an issuer, you need to communicate with the counterparties. This is about data. So if the industry remains at this current stage where we have some infrastructures already in place, but each of them is siloed, then the perspective is not very green for the industry, because the liquidity will be split, issuers will not know whether they have to choose from one to the other, etc. So the interoperability is a key. And to be interoperable, data standards needs to be there, and standard processes as well. So this is the why. Now your second question, much quicker, the how. We are discussing at the moment with some key professional association worldwide, tier 1 players as well, and asking the question, like, how do you perceive the evolution, exactly the topic of this panel. And this is brought on the table whilst it wasn't a few months, years ago. And we start hearing that it's time to gather together and cluster around standards. Some initiatives have already started, others are being considered. And I'm thinking about, for instance, the ISDA CDM or the ICMA bond data taxonomy as an example, will be one of the unlockers of the market.
That's an interesting point. Anybody wants to comment on this or add something? Yes, please, Thomas.
We are absolutely the same opinion as Philipp, and I think that's a very, very important part of the whole story. I mean, our solution can handle any type of token and then smart contract, but how can this be interchangeable between different banks on a DLT schema? Yeah? I mean, if the name, for instance, if the name is in a different type of field or abbreviation, if the structure of the data are not completely the same, you cannot automate processes. Then you have to have some, conversion and some interfaces between, which has to be adapted for every new, let's say, digital bond or whatever you issue. So I think if we really want to leverage the automation capabilities of the blockchain and distributed ledger systems, then it's the most important part is that for the digital securities and for the interchangeability, we need to have, as Philipp said, a standard. How is the interest field named? How is the whatever issue field named, so that every other system connecting after the custody systems can automatically process the data?
I just stand by you too. It's everything I learned about my experience in processing data in risk management. Standardization is the only key, how you can enable automation and how you can enable good data quality. I think it's all about governance, as you already speak about, and it's about standardization. I think this is the key thing, where if you would hire the data quality and smoothen the processes, it's key.
That's an interesting point, because the data standardization part is something where we would also be very unsure where the standard comes from, right? In the Ethereum world, there have been a couple of programmers who simply invented the ERC20 format, and then the standard was there. And there was the community with the ERC20 proposals where people could propose standards, and then sometimes new standards emerged, like the ERC741 and all kinds of other things. So that worked quite well over time. It was basically a governance for standardization of IT, and this worked quite well in the Ethereum ecosystem, same in the Bitcoin ecosystem with the BIPs, Bitcoin Improvement Proposal. So I was always very fascinated about how this worked and that it worked, right? With Bitcoin, it was limited to the Bitcoin network, but with Ethereum, all kinds of token standards have been generated. So from where do you think, in your domain, do you think the standards can emerge? You know, is it associations? I don't think so. Is it large-scale industry players? Maybe, but then is it consortia? Who knows? Will it be the government? Probably not. So where, in case you are demanding standards, where do you think the standards are coming from?
May I can add something here. I mean, there's already ideas, as was mentioned by Philipp, like CMD or the CDM model. There's FPML. There's also like the Actors Foundation, and they already have actively worked on standards. And there was also like, I think in the 2000s, first standards emerging how to decompose, say, financial instruments. So there's also, I think there's already different kind of approaches, say, on the market. And my guess would be that probably larger infrastructure providers, which trying to, say, capture larger parts of the value chain of digital assets, will probably trying to push standards from their side. This would be my guess, my take on that.
Yeah, but it's an international topic, right? Because I mean, I can imagine that within Germany, because the laws are quite highly developed, it will be faster. But what happens if we have a standard in Germany or even in DACH, and then the US says no, it's another one, and then what happens with all the other instruments already issued?
Yeah, and even more so, you know, what we are talking about here, especially in the non-crypto domain, you know, digital securities, they are dramatically, significantly demanding on national law. So yes, you can have a standard for Germany, you can have a standard for France, and a standard for another country. But how can these standards be interoperable between countries? Because it's depending on national law. Let's see how MiCA might help here, not for the digital security space, but for the crypto asset space, and in particular the DLT pilot regime, which then allows cross-border trading of securities. But maybe Philipp, you brought up this topic about standardization for the next couple of months, you know, as a thing which should happen and which we want to happen. What's your vision here?
Okay, first is that the topic is on the table, which wasn't the case. If we had the same panel, like even 6 months ago, we would have like shouting in a desert. Whereas when we are asking, where we talk to major issuers, the question is, what's the next step, right? So everyone in the value chain has made their own experiments. So there's a bit of a moment at the moment where what's the next step? Long term is fine, but what do we do next? And we observe that this topic is brought about with every single account we're talking to, wondering how to proceed. So issuers, yes, but if again, fragmentation of liquidity, how can I achieve it? Not to be the case with standardization, DLT platforms. So what do we observe? We observe three things, three momentums somewhere. Trade associations are, you know, bringing back again, like, look, we've done this, standardizing the instruments as financial instruments, and now they're conscious they need to go further to standardize as a token. Like, what does it mean? You know, take the issuance. Is the instrument in existence when the token is minted? Or is it a technical mint and then you have an issue? And I can name 20 or 30 topics like this. So the second trend that we observe is industry driven projects or communication. I named two. The recent DTCC Euroclear Clearstream communication, like a big message to the market that standards needs to be applied across processes and etc. So from the CSD, traditional finance, there is the acknowledgement that the next phases will be in cooperation between the different ecosystems that already exist. And the last I mentioned is in the more technical infrastructure of the blockchain, take the initiatives of a chain analysis, of a chain link, for instance, with working on the bridges. And we observe chain link moving gradually from a data Web3 squared oracle into an infrastructure able to bridge, and is not the only bridge project. So what we observe is that it is under the hood. It is known by specialists, but our conviction is that it's gonna arrive and be handled this year. Now, if you ask me how, it's a bit early. I don't know, because we are at the stage of people now being conscious that this needs to be addressed.
Good points. Anybody wants to add something here? Otherwise, I move on to the next topic. Okay, then we are now in the movement also towards MiCA, and companies are now applying for MiCA licenses and getting ready for it. What do you expect in terms of developments on the market coming from MiCA? Are there any new impulses coming from MiCA, or is this already priced in, so to say, so that all impulses from MiCA have already been coming to us in the last couple of months, or is there still yet to come more impulses from this source? Who wants to give it a try? Yes, please, Thomas.
I'm not only sales director for DACH, but also for Central and Eastern Europe, and we recently did a study how far the Eastern European countries are in their progress in terms of regulatory on crypto assets and digital assets, and there are quite only a few which have done something, and they're far behind Germany and Switzerland and Luxembourg, but they're in the European Union, and I expect that with MiCA there will be a tremendous rush in that countries, because suddenly there is a regulation which brings much more clarity and which brings much more transparency, and which brings the possibility to offer services to retail and to clients also in other European countries. Is that good or bad for Germany? For me, the question is what will be done in the next, and this is the topic of that webinar, right? What will be done by the banks in the next 12 months? Because at the moment, they are really at the leading edge in terms of technology, infrastructure, experience, everything. And the banks in Germany could keep that difference to the rest of the European markets if they keep experimenting and keep developing skills in that area. So then MiCA is positive for them, for all banks and financial institutions which wait until MiCA is coming. They give up all their possible heads up they could have.
Yeah. Please allow me the contradictory term of a good regulation. I mean, regulation, I think there is no client now inside, but I think Thomas and Marcus, even if we have some positive connection to regulation, I think there is good regulation, and MiCA is a thing that drives innovation, that gives structure. And so it's kind of positive still. Regulation and compliance, or regulation in general, we had some experience which were I think we could miss out, but now I think especially here in Europe, when you see with US, we have a regulation and we have standards, and these standards, again, what Philipp said, I think they will drive the structure for data. But I'm a fan, and this is just my personal opinion, on open source. And I think like the ECR standards in Ethereum, there will be a drive from open source. I would see this as a strong player.
Yeah, interesting, because in Germany we have a couple of tokenization companies, Cashlinks, Wired, Niala, and so on. It's basically 5 companies driving this at this point of time. You could also expect one company to just do a standard and then the others have to somehow adopt it. It's not clear yet, I would say so, but it's as discussed by Philipp, it's a very important topic, driving adoption, as we have discussed previously. Next question. Citibank has now also launched a token system, right? This question is coming from the audience and has brought to me via WhatsApp from Sarah. What are your opinions on the new Citi token system? Anybody wants to give it a trial?
I can start maybe. Sorry, I'm gonna be data-driven again. But before, one remark: in the medieval ages, when finance was invented, also in the Rhine Valley and the north of Italy, one of the first instruments was a deposit of a value in a safe. You are given a paper, and with that paper you can go to the other city and redeem the value or give the paper as a means of payment. So the concept of tokenization is as old as banking system. Therefore, we expect on our side more and more banks to offer this kind of service in the form of a deposit token or a stable coin, etc. But we think it's a very powerful trend because it's at the root of the development of banking systems in early stages with regard to payment. And the reason why I'm saying that is that obviously when a token is issued, there's a lot of data-driven things that you need to monitor, like, you know, how many you have available, what's circulating, who owns it, etc., etc. So this is the angle where we're looking at it. But our conviction is that, and I say our, again, I'm speaking for myself, but I'm not the only one, is that it's going to develop because it's a strong history demonstrated trend.
Yeah, please, Thomas.
Yeah, okay, sorry. I don't know if I should wait or if you I just raise my hand and start talking. I think generally what Citi did is a good thing for the industry because they're, you know, they get the lights of the press and the media. They are kind of ambassador, but what they do, in my opinion, really personal, is the same what you just mentioned for Swiat or Cashlink. They do the same thing. Yeah, so I mean, but nobody in US talks about these both companies because they're relatively small and they're German only and it's not US. But if Citi does it, everybody looks at it and they're standing in the center of the stage, and that's, I think, a very good thing for the whole industry, and maybe and hopefully creates demand also in other countries.
Any more points on this? The question is always, when you have one company launching such systems, how quickly will they become interoperable and how quickly are they letting other players in? The same as we have the case in Germany with Swiat. You know, it was a spin-off coming from the tokenization domain at DK Bank. And the question is now, are they opening up to others? Will they open up? How fast does it work? Are the right players there? And so on and so forth. And then there might be some interesting developments coming. Next question would be, that's a little bit cynical, also a question coming from the audience. Why do so many projects are getting stuck in the proof of concept stage? Is it because these projects are made to be proof of concept? You know, maybe they should not come to scale because it might be projects just coming there for experimentation and then that's it. Or sometimes the ambitions are higher and then, unfortunately, the projects are getting stuck in the proof of concept stage. Who wants to give it a try? What's going on here with these projects not moving on?
I can, if it's okay, Philipp, I can give a short insight from an Austrian large bank. They did a POC with us together, and it was about tokenization of commodities, very interesting thing. And we made a real end-to-end proof of concept besides the interface of the current backend system, core banking system, and ours. That was a manual process. The rest was more or less productive, ready. And they did it to learn where they need resources, where they need know-how, where they should invest in resources and people and education. And then the POC was closed, and what they now do, and I think this is valid for a lot of the POCs, that then the bank goes back and in very often cases has to come up with a business case, because otherwise they will not get the funding for a real productive environment. And I think that's one of the reasons why it looks like that a lot of POCs are stuck, but it takes some time. I mean, we finished the POC with the bank early this year, and they're still working on the business case. And I would say, you know, business case and selection of vendor will hopefully start in Q4. So it's 3 quarters of more or less doing nothing, which is not true. But to the outside world, it was communicated that they did a POC, and then there's long nothing. And in the fast times we're living, that makes it look like the POCs are sometimes the end of the path.
Maybe I can add something, because
I wanted to ask the guys from the consulting perspective, because you apparently have quite some insights here, Markus.
Yeah, I've actually worked on a lot of POCs in the recent years. So in general, it's say in the financial industry, I think the POC phase is more or less over. There's more concentration on, say, MVPs. And just to say in general, this is what also Thomas was mentioning. You start with a POC, then you're doing your lessons learned, then you're going back to the drawing board, then you may go in your conceptual phase, building a business model. So there's a lot of stuff after you have announced your POC, say, to the public, what you have to do. And it can take 1 year, it can take 2 years, it can take 3 years. And it takes a really long time to build something which is going more into production, maybe going for a pilot. And so there probably won't be any kind of communication in between. And from the outside, it always looks okay. They have done a POC, and then they have done nothing, because maybe the expectation is, okay, doing something productive takes the same time as a POC, but this is unfortunately not the case. Or it would be nice if it would be the case, but it isn't. So going into production, that can take a multitude of the time you probably have invested into the POC. That's why from the outside, it looks like that. But what I observe is, at least in the financial industry, there's a lot of things going on. There's a lot of infrastructure built in the background, but it will be released at some point, but it takes time.
Yeah, I could add on that. I mean, you have to differentiate. There are certain reasons why POCs are not continued, but I think there is always a very cutting edge when you get at scale, and there you need the infrastructure. And if 1 or 2 POCs need to finance the infrastructure, this is not going to work. This is our experience. You're not going through the door. You have to separate infrastructure from certain business cases. Otherwise, you will fail.
Interesting point. This explains quite a lot. We have another question coming up related to the MiCA, was basically the emergence of the DLT pilot regime, which is allowing security settlement in the European Union. And the question now was, is the DLT pilot regime really helping the development of digital securities, or is it limiting it because there are limits on market capitalization and other measures such that you cannot really do what you want because some people are arguing that it's a sandbox regime. So is this sandbox approach to the DLT pilot regime, is it beneficial for developing digital securities, or is it hindering it? What's your opinion here? Because this is all happening these days, and it will also be speeding up in the next couple of months.
So I think it's you have to differentiate in which phase the institute is. If it's more on the POC side and hasn't touched the infrastructure, I think it's a good thing. But once you're at scale, I think the limits given by the pilot regime you are very close after one or two transactions. So it differs in which state the institute is.
I may also would add maybe, I mean, it helps you to develop maybe ideas or to develop infrastructure, but you're also taking a risk here because they say when it's finished and the regulatory landscape is maybe changing in another direction, which is not beneficial for what you have done, then it's a risk you're taking. You have to build infrastructure, you're limited somehow. So it's a kind of, I would say it's a kind of risky investment, and it's made for larger players to enter it. So I think I wouldn't say it's hindering, but it could. I mean, it could be better. It doesn't give you. It just gives you a regulatory clarity within a certain time frame, and then it's up to whatever happens then.
That's why you say it's risky. You might invest into infrastructure, yes, and then the regulatory direction goes in another direction and says, okay, bad luck. Your investments are now not needed anymore. Yeah.
I mean, it's like always, the predictions are hard to make, especially if they are regarding the future. And I think we have some time frame there. But I totally agree with Marcus. It's you have to look at your investment and to have the right scale in terms of our horizon in time.
Yeah, but I think the big advantage is that the banks can really test at whatever quote unquote we define at large scale in a legal concealed framework, and that's the important part. Because if you now want to test a productive environment with, I don't know, 10,000 customers, how do you test it? You can't test it. And so I think it's part of the learning process. I'm absolutely with you. If then regulatory, goes left or right, it's an issue. But I think at the current stage, it's a good thing because, as I said, banks can test is maybe the wrong word, but get experience with productive environments and productive products, real life products. Yeah.
And I would add that regulators are expecting this to happen. So first, it's a pilot regime. In the title, you have the pilot, and this didn't come out of the blue. It came out of a request from financial institutions to have a framework, a legal framework, to be able to test features like the digital regulatory reporting, which is a huge pain in the market. So I'm personally very surprised to see little developments based on the considerations about the uncertainty, which is true, but which is a bit short-sighted because it prevents the industry to test the promise of the blockchain together with the regulators and to be at the forefront of addressing a huge pain point in the industry, which is 60% of the digital, of the regulatory reporting is broken in the current OTC market, for instance. So this is a huge pain point. Every single consultant and firms is working on it, and so I'm very surprised that the industry didn't manage to find a way to cooperate and test it. So that means that we have to draw lessons on that. Like maybe the financial aspect of it has been forgotten. Like if there's a test, then it means an investment, who's bringing it together, etc. But let's be careful as an industry not to miss the train, especially on digital regulatory reporting and on the articulation, for instance, between what is done off-chain versus what is done on-chain. So say you have an MTF, many things will be done off-chain, and then the settlement will be on-chain. So the reporting might be, what do you do? Do you do with the RTS off-chain? It becomes technical here. Or do you do it on-chain? This was the occasion to test. So let's be careful as an industry not to miss the boat or the train, whatever the expression is.
And the opportunity, yeah, indeed.
And the opportunity.
Yeah, last question from my side. What do you expect in the next couple of months once the ECB might decide to continue their project on the digital euro? Will it drive this entire domain? Will it drive the blockchain domain? Will it at least drive the stable coins according to the MiCA regime? So what do you expect once the ECB this autumn might decide to continue their digital euro? Who wants to give it a trial?
Maybe I can add something
please.
here. Say when you look more into say wholesale CBDC, I think which is for me the kind of missing part for the cash leg of securities, then you can actually really leverage say the advantages of it, because my observation at the moment is that there's a strong focus on say simple structured say products, you know, without any kind of cash flows or so on. So it's more or less zero bonds. So, but with the emergence of something like a wholesale CBDC, which can be bridged from whatever solutions they have into say blockchain technology, public, private, and so on, then we would have something like there is a missing piece for actually building securities. And I think it will give a drive, but I think it takes some time, because like you first have to build all these kind of, you know, bridges into this ledgers, like, you know, like Polygon, where we have already like securities. So it will give some push into the industry, I guess, because there's a new kind of piece you can work with.
Interesting point. Who wants to add it?
Yeah, I'm not so sure if we all see that push. Because if the whole project is just for institutionals and at first stage, it's the same as with the digital bonds. Nobody, you know, in the media really gets a spotlight. And I think it's important, as Marco said, it's one of the cornerstones of blockchain. We need to have it. But I think it will have a low profile in media, yeah? and as long as we have such topics as AI and so on the front running at the moment, nobody is taking care and looking onto blockchain at this certain time. There should be some initiatives which creates the spotlight also for retail customers. And
yeah, but you know,
at the moment
but But Thomas, that's why I'm asking this question, because what the ECB is doing is really interesting for journalists, and therefore journalists and media are investigating what the ECB is doing. And then, for example, people like me, we typically get the question, so is this now the ECB's answer to Bitcoin?
Yeah.
And the question does not make so much sense, but at least, you know, it really brings this topic into the media and creates some awareness again. Yeah.
Hopefully, yes. Yeah.
Yeah, we will see how this works out, and I see a kind of a competition between the digital euro and stable coins, which are more closely to the application, and we'll see who's winning the race. I mean, if there are certain restrictions coming on the retail side or on the wholesale side, I think the stable coins have a competitive edge in winning this race. But I think it's the race will go on, and I think it's more of a horizon of 1 or 2 years where we see who's going to win the race.
Good point. Good point. And I also, yeah.
Sorry, if I may, we tend to agree and slightly amend Volker's view. I think, I mean, everybody agrees that it needs to go digital. There's no way finance doesn't go digital. So the question is not there. I personally understand and observe that central banks were responsible for the financial stability of our economies and our countries, our children, our lives, are taking the right time and doing it seriously in a very systematic approach. If you look at the reports now, they are now disclosing that it was and it is a systematic approach. I'm testing one aspect with one experiment, another one with another, and they build a sort of a grid, and then they will take the time to implement it. So it's going to be long. If you combine with what Volker said, stable coins, And if there are means of payment, will be, there's no reason why they shouldn't, because again, the banking system started in the Middle Ages with stable coins, and then came the coins themselves coined by for the commerce to expand. Obviously, the coins existed ever since. I'm talking about commercial exchanges. The commercial exchanges internationally only started to develop when the equivalent of the stable coin was invented, because you would lock value and you would exchange paper. So that solution is implemented now. I can name people, including myself. I mean, there are issuers regulated. There are people like consultants who make it happen. There are people like Metaco who make it happen technically. There are people like us who are able to observe and tell the market what's the primary issuance, what circulates, who owns it, etc. So it's up and running. So there's no reason why giving this missing element of the cash leg is one of the obstacles. Probably I would agree with Volker, but slightly amending, like probably we see the stable coin first and then CBDC later. And then a question whether stable coins will survive the emergence of the CBDC on the later stage. But I would see the stable coin as an enabler.
Yeah, I would agree what Philipp just said, because like once say a wholesale CBDC emerges and you say we definitely will by then hopefully have a stable coin, I think the stable coin will be in a slight disadvantage, just like, coming from the risk perspective, because you have counterparty risk, but you don't have with the whole CBDC. And if you look like into like say in a bond structure, so there will be a different pricing because somebody has to take the risk and somebody has to pay for it. And if you have a cash flow, say in stablecoin, they have another kind of risk structure than having, say, a wholesale CBDC. So I think probably if you want to have financial stability, as say promoted by the ECB, it would be probably advisable to use something like a wholesale CBDC in say in a bond structure instead of a stablecoin.
Yeah, it's a real pity that we're running out of time because I think this is a topic worth talking about. And I think it will very much depend on how many restrictions are on the CBDC and how they will evolve there. And I think many of the things that you already mentioned with risk management, if you have a pledged amount, I think you can restrict the thing, and you can separate the whole money supply thing, what is a core competency of the EZB. You can separate this from the digitalization and the processing. But I think it's worth a talk more than 1.5 hours.
Yeah, let's make this another topic because the ECB will announce very soon what they are doing, so it's worth it to explore it further. Thank you for this very, very nice discussion. For me, it's really nice to see that the quality of the discussion is getting better and better month by month, because we could not been able to discuss DLT pilot regime and other things 2 years ago, 1.5 years ago, because right now people are investigating and exploring these topics. So thanks. It was very nice. I also learned a lot. And with this, have a nice afternoon and a nice rest of the week. Thanks much. Goodbye.
Thank you. Bye.
Bye.
Bye. See you around.